Okay, welcome everyone. It's Enrico Janko. I am the Signal, powered by the mighty Team Alliance. This is part 2, and this part going to get down into a little substance. I want to give you just some practical information that you could use right away. That's going to work for you. Is going to show you exactly, like I said, high probability, high profit places to take a trade. And just doing this alone is going to help you out immensely, right? Started you off on part 1, gave you just a little history, some brief history. I was just talking to you. But now we're going to get into some education. And I'm mainly going to just be looking at the slides, because with the slides, I believe the information I'm trying to communicate to you is actually going to be easier for you to understand. All right? We're going to be looking at Enrico's riffs, as I told you, as a prelude in the last videos. These are support and resistance zones that are created when the big banks move money. Now, these support and resistance zones, everyone has seen them before, right? But seeing something and then doing proper analysis on what you've seen are two different actions. One is just knowing, one is actually doing something with the knowing, right? And that's what we want to be at. What do we do with this knowing, right? So this Enrico's riffs is one of the main principles that trade every market by. It doesn't matter which one that we're looking at. So I wanted to make this video just a real and brief instruction on what we're looking for, what I look at. And so once you get into the actual group and into the actual training, you already know like the preliminary information, so you can dive into a little deeper know-how on how we actually use these Enrico's riffs. So let's start up and see how it all goes down. Enrico's riffs, support resistance zones that are created when the banks move all that money. All right? Enrico's riffs are made when the market begins to trend in one focused direction. All right? So the market has to be either going up or going down. And a simple way to understand if the market is going up or down on your screen is if the market is going diagonally across your screen, as my mouse is, my cursor is going diagonally across like that, it's going up. If it's going diagonally across from top to bottom, right, top to bottom, it's going down. All right? So those trends, right? These it's easy to see these. The general public call what I call Enrico's riffs support and resistance zones, because that's how we categorize it. But one thing is important in learning Forex or trading is that a lot of times the nomenclature, the names, they mean so many different things to so many different people. So that's why I named it what I named it, so it would be specific to what our goal is with it. All right? So when the big money moves, it leaves tracks in the sands, right? Because the transactions that they're doing are so large, it's impossible for them to actually hide it. And they can't do it at one time. They're moving so much money, they can't move all the money at one time, right? So they must break the money up, and they must smartly, wisely, logically move the money from one price level to the next price level, okay? All they can really do is kind of fake people out to suck them in so they can make more money and have the market momentum to push along what they want to do. But the money that they have and what they are trying to do is evident because they have so much of it to do. All right? They always move the money in an orderly fashion. That creates these Enrico's rifts. Support and resistance levels that remain relevant even after the transactions have been completed. So after the transaction completed, this rift is left in the sand, a line in the sand, and is relevant for a longer time frame than it might have been seen on, right? So I might see a rift in a 1 minute and it's relevant on the 5 minutes, 10 minutes, so forth, so on. These uptrends and downtrends, they're going to naturally create price level support and resistance. So when you got an uptrend, you got a downtrend, naturally there's going to be these levels of support and resistance. Enrico's rifts are supportive price levels created in an uptrend, right? So if the market is going up, we're looking for prices that support what's going on. And resistant price levels created in a downtrend. So if the market is going down, you want resistance on top. Okay? So the resistance levels eventually become support targets. So everything, just like you learned probably, some other information about support and resistance and how it flips over, support becomes resistance, resistance becomes support, right? The same thing. In that uptrend, when the market is going up, and is creating support levels in the market, those support levels will be resistance price targets later on. Just as in a downtrend, market is going down, those resistance levels that are being created in that downtrend, when we extend them out through time, they become our support levels in the upcoming uptrend. They become targets. All right? Just like I said, anyone can actually look at a chart and point out where the market has clearly changed direction and where it possibly will do it again. But as any trader knows, in hindsight, all this is going to look simple. But in actual practice, somehow it's 100 times difficult to actually do consistently, right? Because it has a lot to do with our emotions and how we're made up as people. All right? But let me repeat again. Enrico's rifts are support and resistance zones. So they created in uptrends and down markets. However, not just every support and resistance that you see is going to be qualified and called an Enrico's rifts. All right? So you want to understand that how this is actually created, right? So when the market is in an uptrend, say, you're going to note that there's support being created, support levels being created in that uptrend. Now, when you extend those levels out, the extension out is where Enrico's rifts is being created, right? Okay. Once you know how to spot these Enrico's rift there in any trading platform that you're on, you're going to understand that this is like a personal gold mine, really. Really. Like, once you understand. I'm going to be using candlestick charts mostly when I go over this to illustrate what the qualified Enrico's rifts look like and how the unqualified ones also look like. We'll actually get on the charts and see how it prints up. I got some slides here that we're going to go through, right? And if you're new to candlestick charts, you can just look it up on Google or whatever. You'll find plenty of information on that. Let's get into finding some Enrico's rifts actually in the market. Again, time frames and dates that are on this are irrelevant. I'm just showing you what is going on in the market. I'm just showing you, illustrating how these Enrico's rifts look, how they're being created, right? We're all doing this in hindsight and teacher mode anyway. So you always got to remember that a lot of things happen that I don't even remember happening as far as news-wise and all that and this and that. But the great thing about Enrico's riff is that any type of spike or news event usually happens around one of these riffs. And that's the reason why we actually look for these riffs, because we know they're going to be a hotbed of activity. All right. And they're universally relevant points of interest in the marketplace. We're going to first look at resistance. All right. How does resistance look in a trading range when it's forming? All right. And this is, once again, this is important. This is important. Everything I say pretty much in trading is important, because if you don't do it, or if you do it, you can win money or you can lose money because of it, right? Everything in trading is important. Trading has a lot to do with paying attention to details, right? Paying attention to details of what is actually happening in the market, not the details of what's going on inside of you, and letting that play out in your actions, because that might not be in sync with what the market is actually doing. But resistance, how does resistance actually look in a trading price range when it's forming? Let's look at that. When the market is moving and it hits a point of resistance, right? What does it look like? All right, got some pictures here. These shaded areas is showing resistance points, right? And let's give a definition really quickly for you, right? For our purpose, we like to see resistance as a group of 5 candles, right? And we want the candle in the middle candle, we want that candle to have a wick or a body higher than the candle before, the 2 candles before and the 2 candles afterwards, right? So 5 candles, right? 1, 2, 3, 4, 5. This shows 6 candles, but here's the third one. The wicks is, this one wick is higher than the 2 wicks before it and the 2 wicks after it, right? Same difference here. Look, 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5. That's right. So anyway, this, even though it's a red candle, right? It's a resistant candle, so that's actually good. Over the first 2, below the second 2, right? And over the second 2, excuse me. Over the first 2, over the second 2. Let's look at the high for this one. Same thing. The high is over the previous 2 candles, over the next 2 candles. Next one. Over the previous 2 candles, above the 2 subsequent candles, right? Groups of 5, a group of 5 candles. So that's what we call resistance. That's how we see resistance. And if you look, where are we seeing? We're looking at a downtrend, right? Looking at a downtrend. Market moving from the top to the bottom. Real simple stuff. I'm keeping this super simple for you, because that's the way you should look at this. Super simple. And that's the way you're going to make the most profit, by looking at it this way, right? So these pictures right here, they show all the resistance points. They show where prices are being rejected, right? So price try to move up, gets rejected. Price moves up, gets rejected. Price moves up, gets rejected, blah, 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 so on and so on. All right? In a downtrend, the resistances are created at the top of the candles, just as we said. All right? At this time, because we're in this downtrend, right? Because we're looking at a downtrend, we're not going to even recognize any support levels, right? We're not going into support at all, right? We're just only looking at what the resistance levels are, all right? Because support doesn't matter. Support doesn't matter in the downtrend, right? Because the market is moving down. We expect there to be less support, right? We're looking for about the resistance on top in the downtrend, right? And no, we could take these and we could just easily mark them off, right? we can just easily mark these points of resistance off for future price support targets, right? So this is going to really help plan out your trade activity, right? So let's do a little imagination, right? Let's bring some imagination in. And imagination with your trading and imagination in life is important, because you got to get to the point where you are like an alchemist, and you could turn, sugar to sunshine, right? So you got to be able to use your imagination, right, and make what you imagine into reality. That's what creation is about. All right. Excuse me. So what we're going to do, hold on, let me pause 1 second. Excuse me. Let me get something to drink. Okay, let's continue on. Now, we got the downtrend. See the resistance created at the top of the candles, right? And at this time, we don't recognize any support levels at all, right? And we're able to mark these levels off the top of these candles, right? We can mark them down in a regular book, nothing fancy, right? Regular composition book. We can mark those levels down and use them as future support targets. Very simple stuff. That's why I said we're basing all this on common sense. Everything that we build, everything that I teach is going to be based on common sense, and it works because no one kind of uses common sense because they get emotional about things. All right, that's a big part of this. If you remember when I told you in part 1 about novelty being the downfall of many traders trying to solve the puzzle. You got to think about it. So let's look for some more. See, this still a downtrend. Look, resistance at top of the candles. 5 candles with the candle in the middle at the top. Candle in the middle at the top of the whole mix of the 5 candles. Candle in the middle at the top of the mix for the 5 candles. Same thing here, right? Very simple to see that. So let's look at some of this now. This is how we start looking for Enrico's rifts, right? Eventually, the market will return back to this point of interest. As I said, if I'm looking at a downtrend, a resistance, the market is going to return to that level a majority of times. And when it does, it will stall once it meets that point of interest. And once it meets it, a few things can happen. We got 4 different scenarios that could happen once the market actually meets Enrico's rifts, that level again. All right, so we're talking about a time that happens in the future from when we first spot the resistance level, right? This is after we extended it out and the market returns to this level, right? And it's looking at this level now as a level of support. Okay? So the market could just meander sideways, right? Until it finally pops through. Sort of like on this picture, you see the market kind of going sideways first. Then it pops through the level. It could continue in this upward direction after it pops through. It could continue just going up, bop, 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 right? Or, as in this picture, it can reverse. It can reverse down, and what? It'll revisit this level again. As you can barely see, you can see the market coming back to that level a little bit, right? So, that's the first scenario that could happen. Market could pop through a little bit, mess around a little bit there, pop through, then reverse, and then we're looking forward to revisit that level again later on. All right. The second thing that the market can do, and this is an interesting point for a lot of you guys in Forex that use Fibonacci numbers or any type of numerical way of looking at the waves, sort of like your Elliott wave guys and all those type of people that use those type of magical numbers, I call them, right? So the market could strike the price level and a reversal could happen, right? Like here, like it hit the strike level, it breached it a little bit, but it reversed. And it reversed because right at this level, you see we got a Fibonacci number, 61.8, one of the more important sequences, right? Around the 50% level, the 61.8 level. Look, the market hit right there also. So what happens is if there's enough people in the market, enough traders looking at other things that point to this level, and many times other indicators will point to this same Enrico's rift. So Elliott wave cycle could be ending here. A Fibonacci number could be here. A pivot level could be here. Right? It could be all those type of magical numbers that people use right at that level also. And that will most likely, because of the confluence of events at that period of time, reversal will most likely happen if there is a confluence of events, as that is. The third thing that happened, the market could actually break through the level, right? The market could open and close above the level. Then it could quickly retreat, opening and closing below that same price level. See that? Going up real quick, open, close below, above it, then open and close below that level. When that happens, this line is kind of like disqualified. It's not as strong as it was before. Like the open and close above this level real quickly kind of disqualifies it until it opens and closes above it again. And then I could look at it with renewed interest and renewed strength where reversals could actually form. That's an interesting phenomenon because we're looking at things. It depends a lot on what time frames you're looking at and how price action sets up for this to really make sense to you, right? It's a little advanced. But it's just a portion of it that if you analyze it more, more information will come to you, right? That's what trading is. Trading is taking this information of what could be high probability opportunities and analyzing them to see if they will occur over and over again in the market. All right. The fourth thing that could happen, if the market breaks through the level, right, and it continues in its trending direction, it's a good thing. As long as the broken level is qualified, right, clear, open, and close above the level, right, then we can expect the market to return to this level and possibly offer us a nice bounce entry or some other high probability price action entry. So remember, we got this level when the market was going down, right? This used to be a resistance level that we extended out. Now we extended it out. The market is now going up, meeting this level again. Now when the market opened and closed above that level, this level now becomes a support level, right? It became, first it was a target, now it becomes a support level, right? And is a qualified Enrico's rift. So I will be waiting for the market to eventually return back to this level, right? So with that knowledge, I can now plan out different trade scenarios and different risk rewards and opportunities based on those trade scenarios. All right. And all of them will be logical. They would all make sense with what the market is doing. All right. So just a little information. Now let's look at the same thing from the support side. Again, this video is running a little long, so I'll chop this up and do another video for you, and we'll talk about the support side of this. It's very much like the resistance side, but I actually want to go over it step by step so you guys really get this down really good. That being said, I think we could go over support a little bit quicker because it's the same as the resistance, it's just the other side. So let's go over it. Supports, other side of resistance, many of the same characteristics, same behaviors be there. All right, again, let's look for a 5-bar pattern, right, where the candlesticks, we're looking in a bull trading market. We're looking for an uptrend. We're looking for the market to come from the bottom and go to the top of your screen horizontally, right? So that's what we're going to be actually looking for, and we will be looking for supports. So we're looking for a 5-bar pattern in uptrend markets at the bottom of the candlesticks. At the bottom of the candlesticks. Here go 5 candlesticks. This one in the middle lower than the first 2 and lower than the second 2. One in the middle lower than the first 2, lower than the subsequent 2 after. Again, lower than the first 2, lower than the 2 after. Again, lower than the first 2, lower than the 2 after. Right? Again, lower than the first 2, lower than the first 2 after. Again, lower than the first 2, lower than the first 2 after. You see this one right here, it's about almost equal. Most of the time, that is just as well. If it looks right, it will usually perform the same function, all right? So, now, these support levels, as I said, are indicated by 5 candles, with the center candle having a body or wick lower than the 2 candles before it and the 2 candles after it. All right. So again, as we did before, what we are looking for at the support levels, the resistance levels, so the top of the candles we don't care about. We're looking for support. So we're just looking at the bottom. Whatever's going on the top as resistance, we don't care about. We're looking for support of the move up. All right. Support of the move up. All right. You see here, each one of these situations shows support, shows the support that we're looking for, right? The pattern, the setup, that's what we're looking for. The action, the price action that we're looking for, right? You see it all over. Here's another uptrend, and I actually extended this out, right? So you can see kind of way it kind of looks like. This is the uptrend right here. So this is when we're looking for our supports. Support here, support here, support here, support here. And what we would do, we would extend lines all the way out. See, we would extend these lines outwardly, right? Each line, we would extend it outwardly. And then they would become the targets over here, our resistance targets, all right? Our price targets. Right? We'll be looking for the market to reach these levels again, right? Very fascinating stuff. Okay, so when prices reach these support levels again, there's a high probability that the market may stall and move sideways for some unknown amount of time. And again, we're talking about 4 possible events that can happen when we meet this critical point, right? The market could approach the level and not break it. Right? Price does not open and close below the level, right? It may continue just sideways and then eventually break through the level, right? Right? It continues sideways, then eventually broke through that level, right? Just like before, if the market strikes an Enrico's rift level and it reverses, there's a good chance that other technical events were in the market, right? As we said, Fibonacci magic numbers, Elliott wave magic numbers, All of those could have been in play also in the market. All right. And if you remember, the market was what? Going up when we created these levels, right? So it's meeting these levels on the way down. These are its targets. Here's diagram 3. You see the market can break the level as before with an open and close, right? It breaks the level with an open and close below the level. Then it does the same thing again. So this price level is no longer of interest. We can't trust it, right? Now, once it does it again, it might become a strong area of support again later on. But we don't know that yet. But in the immediate time, the price level is just totally disqualified as pertinent. All right? Price might still store over there and everything, right? But we don't look at it as closely yet again until it's qualified again. All right? And the last step, the last thing that event that can happen is the market breaks through the level and it just continues through the level. And this is good. As long as the broken level is qualified with an open and close below it, we can expect the market to actually at some point return to this level. See, the thing is, what messing with people a lot is you don't know when it's going to return to this level, right? But it is going to return to this level most often, right? Depending on what time frame you're on, that's the big difference. So maybe if you're on a 1 month time frame and it breaks this level, well, it might not hit that level again for 6 more months, 7 more months, right? But if you're on a minute time frame and it breaks this level, well, it might come back to this level in 5 more minutes, 6 more minutes, 10 more minutes. You see, so this is all based on time frame. Also plays a part in how you are going to trade it and how you are going to perceive it. So here's a resistance right here, and it's becoming an Enrico's rift, right? It opens and closes above the resistance level, right? Easy little resistance level. See, this candle is bigger than both of them, and we got the lined it up right here from when it used to be a support, and I mean used to be a resistance, and now you see it comes up and becomes a support level and an Enrico's rift. Okay, so this line was made before the market, now just coming to it, and you see what it did once it got to that level and became a qualified Enrico's rift, right? Same thing here, support becomes Enrico's rift, right? Market coming down to the level that we marked off, right? Open and close below that level, and then the market goes where it's going. And we're looking for it to come back to that level, right? The fact that we know something, this is something that we are assuming, not that, and it's very high probability. So because we have something like that, that's where we can make good trades, man. Got to really look at this. Really look at this. I'm all those positive. Just doing this alone. Just doing this alone. Not anything else more. You're going to win more. Just doing this alone with common sense. Right? Just doing this alone with common sense. So common sense will tell you that I'm showing you where the lines, the points of interest lie with these Enrico's rift, right? So it's saying that if you know that, then you can do market analysis and forecast based off of just real common sense information. All right? Real common sense information. Resistance here is being disqualified, right? You see it open and close above the resistance level, then it comes back, opens, close below the resistance level, right? So just information like this is just beautiful to know, because it makes where you place your stops. And where you place your stops is where you make or lose your money. So that's important to every trader. So this is going to show you right where to place them, right at the common sense location. That's what I'm saying. When I'm talking about common sense with this, is that you're not going to try to outthink nothing, right? If you're wrong, right? If you just pick the wrong direction, so suppose you have this line right here. This is support being disqualified, right? Support level came down to this support level, open and close below it, and then it did it again. So this was disqualified. But just for sakes of talking, if this was a level I'm looking at just in general, and I know that this level is relevant, then I can buy at this level or sell at this level. Right or wrong, the trade is still a very good trade because my risk and reward levels are excellent. It's going to be 1 to 1 or 2 to 1 or 3 to 1 in almost in any direction. All right. So if I just got to pick my side and say I'm just going to be buying here, right? So the market could reach here like 5 times, and because my stop is so close, maybe 3, 4, 5 pips, that anytime I'm stopped out is going to be for a very low amount. But when I'm not stopped out and the price goes in my direction, I'm going to automatically recoup any losses that I have and then some. All right, so this is really just common sense places to look in the market. All right, here you see market returning back to the support line. All right, this is the line created right here, and the open close below the line, and we're going to wait for the line to return back to this level of support. Right, look, as you see, this is an uptrend. Right, this is a support line. Right, and the market, we look to return back to that level. Right, it opened and closed below it, and we're going to look for it to return back to that level. See how simple this is? It's very simple what we're talking about, but it is. I don't like to put guarantees on anything because everyone is, will mess up a guarantee, because people will mess up. But this is close to the most solid. It's solid. So you see here in this downtrend, you see the market returning back to this resistance level, right? So I'm also going to have a resistance level up here, right? I'm saying the market's going to return back up here. One up here. Market's going to return back up here. That's what I'm assuming, right? Once they start buying up again. So here, I look, this line right here, resistance level. What did market do? Market returned to the resistance level, right? And it reversed. It remained resistance. It didn't become support. It remained a resistance level. Okay. So these are important, man. I really can't, I don't know if I could overstate it. Can't overstate it enough, right? If you take the time just to really just study these Enrico's riffs and the behavior, the price action of the market when it approaches them, I think you're going to be just like a lot of other winning traders that are going to really, they're going to acknowledge the sheer accuracy of the forecast price targets. I mean, I'm not the only trader that has ever seen it, right? This is not just me. It's many other traders that have seen this, right? And it's many of the traders that have seen it, but still don't know how to trade it properly also, right? It's many other traders that have seen this, but actually don't know how to trade it properly. That's also in the mix. Because with this, doing this alone is going to improve your trading probably about 85%. But depending if you were terrible already, that might not be enough. That might not be enough. All right? So you got to remember, because not every Enrico riff is going to reverse or be relevant in the market. So it's a level of patience and discipline that you actually have to actually wait for the price action to confirm or disqualify the relevance of the support resistance, right? And this is where it gets a little tricky for people. So I'm actually in this video now, and I'm gonna give you a little bit more information on how what you can do about that right there. All right, and that's gonna help you, and maybe that'll push you to maybe the 5% more till you get to about the 90% level, maybe, possibly. But I want to do that though, and I know this is long, and I know it's kind of extensive, but I want you to actually understand first the way I'm kind of looking at the market and know what we're going to be doing, know how and what I'm going to be doing early. All right, so we can effectively and efficiently get you into being profitable. So hold on and listen up for video number 3. Stay tuned for that one, right? Part 3 of this, all right?